What up, Hyperchange? Welcome to another episode. I'm here in San Francisco with Jason Calacanis, who is an angel investor. Recently did a book review on the channel of his book, Angel. Was super inspiring, got me really hooked into looking into the angel investing space. And I thought it was particularly awesome because you really give people a playbook of this is how you can be an angel investor. This is how I became one.
Yep.
And I just love the practicality of it. And it's really inspired me to think about how I can get involved into this asset class. So thank you for writing that.
Thank you for reading it, and then your effervescent review on YouTube. Your YouTube channel has a lot of fans, huh?
Yeah, enough to be loud enough on Twitter to try and get an interview. So
yeah, you go. Mission accomplished.
Yeah, so I was wondering, just for the Hyperchainers, I know you've given your background a lot of times, but maybe you could just give us a brief overview of who you are and how you got into the angel investing space.
Sure. Serial entrepreneur. Started out in IT, like fixing computers, and then started a magazine in the 90s called Silicon Alley Reporter, which became very large very quickly during the first dot-com boom. I remember being on online services and having a dial-up modem to get onto online services in 1983 when I had a 300 baud modem and a 1200 baud modem where you dialed up into online services back in the day. And so I've been online since the 80s. And started the magazine, became a journalist, serial entrepreneur, creating media properties, created Engadget, Autoblog, Joystick, and a company called Weblogs Inc., which was my second company, sold that to AOL. And a friend of mine at Sequoia Capital, which is the number one venture capital firm here, I had introduced him to a lot of great companies, some of which they passed on investing. And he said, hey, if we gave you some money, would you invest it with us? And we'll split the money 50-50. The return's 50-50. And I said, okay. And 3 of the first 6 or 7 companies I invested in became what we call here in the Valley unicorns, which is kind of like somebody showing up at Madison Square Garden, being on the Knicks and just hitting 3 3-pointers at the top of the key, in their first 6 shots and winning and literally winning a championship because one of them was Uber.
So great rookie season, basically.
Like it would be like if a rookie came into the 7th game with 4 minutes left on the clock and hit 3 3-pointers and won the game. It would that ridiculous of a lucky streak. It would be like getting pocket aces, 3 times in a row in a poker tournament and winning, So there was a lot of luck involved in that. If I didn't hit the Uber investment, people would look at me and say he's an angel investor. But since I hit that one, people say he's the world's greatest angel investor. So, one hit does a career make, it's true. But I also have 9 or 10 other times I hit home runs, not just grand slams. So that's the nature of what we do in investing here. And after 100 or so investments, I thought I could write a book about this. And I'm a writer by trade, and I have a great book agent. And they had been asking me to write a book over and over again. And usually it was like blogging for dummies or podcasting for dummies or the internet for dummies. And I was like, I'm kind of getting the message that you think I'm a dummy or that the dummy audience I'd be appealing to them. But I just thought if I'm going to write a book, it should be something that I have expertise on. A lot of people believe they should write a book in order to become famous or to become a credible expert. To me, that does a disservice to books. I believe you should only write a book if you're already an expert. Writing the book, maybe if you were going to write some people like Michael Lewis will delve deeply into a subject to write a book, or Michael Crichton would really get into a subject in order to write a fiction book. So it's possible there are some great writers who could spend a couple of years studying a space and write a credible book. But I think if you're a business person and you're going to write a book, be an expert on the subject. I'm not writing a book about building billion-dollar companies because I haven't built one. I built $30 million companies, or $50 million companies, $100 million companies. I haven't built a billion-dollar company. So I'll leave that to the person who built billion-dollar companies.
And so a lot of successful investors, they often have like a lens that they look through the world. Like, what drew you to investing? Why did you believe there was an opportunity of such magnitude? Like,
I didn't actually think it was of such magnitude. I just thought I would invest in my friends' companies and support them. It was only in retrospect that 3 of my friends who had asked me for advice and introduction to investors, Elon, Ev, and Mark Pincus of Zynga. Evan Williams was doing Twitter at the time, and Elon was doing Tesla, or he was an investor in Tesla, and he had gone through, I think, 4 CEOs in the first 2 years.
Wow.
And he was just, but he was a co-founder essentially by the amount of money he put in. I mean, by any definition, but he desperately did not want to be CEO of that company. He tried many different CEOs, and it was incompetence after incompetence after incompetence, and then finally he got in and righted the ship. So with those 3 friends, I wasn't angel investing, so I didn't invest in their companies, but I was advising them or just giving them, casual advice like, oh, maybe you should talk to this person, maybe you should talk to that person. And it turns out I ran with a very high-end group of individuals who were poised for great success. This is 10 years ago. And so it just turns out in my late 30s, my friends were all hitting their peak careers. So I think it was a timing thing. And also the stock market went on a tear after the Great Recession. So 2007, 2008 is the time period I'm talking about. Mm-hmm. And I started investing right after that. So I've only been investing for 8 years or so, 9 years, maybe 9 years. And so it's been very surreal that so many of these companies were getting bigger. And back in the day, internet companies in America didn't really look international all that much. They would think about it. Yeah, maybe someday we'll do a partnership in Japan, or maybe someday we'll get to Australia, or we'll definitely get to Europe at some point, maybe Germany and England and Ireland, and maybe some of the English-speaking places or places where people, have English as a second language for greater than 50% of the population. So people were not building the at-scale type of companies that we see today. That's a very new thing. The idea of a global company, really it was Facebook and Google and Uber that really proved you could take a service, make a playbook, and move it country by country by country, and eventually break 100 companies or break a couple of thousand cities, right? So it took a long time for that to actually manifest itself, but now it's here.
Interesting. And so now, beyond having the right friends at the right time, so to speak, is there any themes in your investing? Like, I've noticed a lot of your investments are in different sectors, but they sort of get tied back to this sort of software is eating the world trend, and maybe that's the window of opportunity.
I don't have a trend idea. I don't have a sector idea, and I specifically work against that because the greatest outcomes are the ones that are not definable at the moment. They're definable after the movement's happened. So people looked at Airbnb and Uber, and 20 out of 22 people I introduced Uber to said no. And Airbnb had even more dismal statistics. I think Brian Chesney wrote some kind of Medium post at some point that like 40 of 41 investors were just like no. And one investor like took a meeting and then said no. It was like literally like 50 no's or something ridiculous. And the reason was at that time, people didn't think that Silicon Valley companies should operate in the real world. In other words, it should operate on your computer screen or maybe in an app form, but not in the real world. But then Elon, Airbnb, and Uber really changed people's perception. So E started making cars, even though they were prototypes and they were a little rough around the edges. The original Roadster was not an elegant execution like the Model 3 or Model S or X are. And Airbnb, people were just like, oh, so you're going to stay somewhere and then a serial killer is going to murder you? Like, no.
So if it's so hard to look into the industries, you're just betting on the jockey, I guess? Is that where a lot of your
analysis I look at the founder
in?
And just think, does this founder, are they so passionate about this idea that they'll never give up? And does this founder execute at a high level? Those are things that I am uniquely qualified to figure out through years of playing poker and reading people and just knowing if they're going to be successful in life or in that poker hand or in that poker session. So being able to read people is a skill I have. It's not a perfect skill, but it's definitely better than the average person. So I can sort of see if the person is lying to themselves. I meet a lot of founders who are trying it on for a living. They think they want to be a founder. They saw a movie or they read an article about being a founder. They, saw some founder speak and like, I could do that. Just like some people go to Sundance or the Toronto Film Festival, they watch movies and think, I'll be a director, or an actor, or whatever, cinematographer, screenplay writer. But they don't have the desire to put in the effort needed or to have the amount of suffering it takes to do great things in this world. So most people just do not have the constitution to suffer enough to get these type of outlier results. And it is outlier results that happen in the startup world. It's not about, just average results. So everybody thinks they want to be a Jedi Knight and they like the lightsaber and they pick it up and it's a really cool idea to be a Jedi. And then they realize how much training it is. And then they face off against Darth Maul or Darth Vader or Count Dooku and they lose a hand or a leg or an arm.
So are you... I feel like being an entrepreneur has kind of become cool sort of in the culture, and maybe this is magnifying this problem of people. It's sort of like the new rock star in a way. So people want to be entrepreneurs, and so more are wantrepreneurs, I guess you could say.
Some people use the term wantrepreneur.
Are you seeing that? And
we
what
call
I
it
wonder
tourist
is
season.
I saw Chamath recently on your podcast, and he has this very interesting explanation of like the Silicon Valley sort of Ponzi scheme theory of like raise your Series A, show more growth, Series B.
Yeah.
And I wonder if like you're seeing evidence of that actually happening by more wantrepreneurs coming into the
I don't think
system.
the wantrepreneurs actually get to that level of getting a Series A or Series B. I think it's pretty hard to get there.
Yeah.
But there are people who are trying it on for size. And I don't know if they'll be here in 10 years or they'll be here after the bust because it's always a boom and bust cycle here. So I think that there's a lot of people trying it on. They may or may not stay. They may or may not be qualified. But there's a lot of people who are just straight up tourists. It's like people go to Hawaii and they're like, oh my God, I want to live here. Mm-hmm. I'm totally going to live here. And they go look at a couple of houses and then they go back to Milwaukee and they never move to Hawaii. And then there are some people who literally rip up their return flight and they just say, I'm going to have my sister pack everything up and send it to me. I'm never leaving.
Yeah.
And that's what I see a lot of. And so, some of them, but to Chamath's point about the Series A, Series B, there is a big emphasis right now on spending money to grow quickly. Some folks want to see explosive growth, like my friend David Sachs at Craft Ventures, who's also friends with Chamath. They want to see explosive growth. Slack had the most explosive growth of any enterprise software in history, and Yammer was number 2. Well, and Chamath was an investor in both of them, so it's a little hypocritical of Chamath to say, I'm not for explosive growth. But I think, and that's what the cynical person would say about his podcast appearance.
But it's like forced explosive growth that I feel like he's, not because it's such a good product.
Unhealthy would be the problem.
Okay,
so that's, I think, what he was pointing out. So I think some people who are cynical would say, oh, Chamath was just mouthing off and, he benefited from it with Slack. Well, Slack is not a leaky bucket. Like if you put money into Slack, companies turn on Slack and it's not going to get ripped out. It would take a lot of work to take it out of a company or replace it. So I think his point is, to your recognition of his point, maybe growing in an intelligent fashion is a good idea, especially when things get heated up like this. So right now, I hear a lot of VCs like, you got to grow faster, you got to grow faster. How can you grow faster? Why aren't you putting more money into it? Some cases, that's the right thing to do. Other cases, it's not the right thing to do. So if I went on the street corner here and I decided to sell, Tesla Model 3s for $10,000, I would sell an infinite number of them, and I would lose $40,000 each time, right? So you can get a lot of activity around a startup, and we saw it there was a startup here called Lux that I loved, Luxe. For $20, they would have a person waiting outside your office to take your car and go park it for you. It was an on-demand valet. And I said, this should really cost double what it cost me to park. So it was costing me $15, and I was paying $15 to park at the lot across the street and giving the guy a $5 tip. So it was costing me $20, and Lux was costing me $15, and I'd still give the guy a $5 tip. So I was like, wow, for $20, I can hand my car off to a person on the street corner anywhere, have them park it, and then have them bring it back to me, be waiting for me downstairs. It should have cost twice as much. And even then, it would still be hard to make a profit for that level of service. So they went out of business, and I had an opportunity to invest in that one. There was another one called Ship. Ship was a very clever idea. I want to ship this mug or this laptop to my mom, and instead of me packing it, wrapping it, filling out a label, I just take my phone, I take a picture of it. Somebody shows up, they put it in a box, they wrap it, they bring it to the UPS depot out in Oakland and ship it to my mom, and it gets there the next day. And it cost me nothing besides what the UPS cost would be. And they were going to do the arbitrage. UPS would give you like 1/3 off if you brought it to the depot center. They would give you 2/3 off if you brought it to like the regional center. So their idea was, we'll just collect everything and bring it to the regional center. We'll get 50% off, and then that's where we'll make our margin. It didn't work. Surprise. So sometimes people just build products and they don't have good unit economics. And unit economics are in each individual transaction, do you make money? Not in aggregate, because everybody believes I'll just make it huge. I'll hit scale. Once I have scale, then I'll figure it out. Yeah. It's like, well, if Lux or Ship were to hit scale, they still would not have figured it out. Because people were only using the product because it was so cheap. Once you make Lux $50, the actual cost of having somebody valet your car, then even a guy like me who is not price sensitive is going to be like, $30 more to drop it in front of my office versus across the street where I'm dropping it in the lot. I'll just drop it in the lot. So I just went back to dropping it in the lot.
And like on the flip side, though, like a product like the Model 3, have always had this weird theory that like even if they sold the hardware at break even, like
the Model 3?
Model 3?
Oh, the Model 3. The Model 3. Yes.
Like even if they sold the hardware at break even, there's so many opportunities. Like as the battery costs fall, as you could sell self-driving software, you could sell apps on the main touchscreen. Like so, there's those kind of business models where it's like where the unit economics are going in your favor because maybe with economies of scale you're getting cheaper, and then with a network effect and like add-on services you can increase your margin. So how do you differ between like something like a Ship or a Lux versus like a Tesla?
Sure. So if the product requires building a huge factory, like the Gigafactory, and then once you have it built, you can pay back that factory over 20 years. You could say, okay, the factory cost $1 billion to make, and over the next 20 years, or if the lifespan is 30 years, we will have paid off that factory this amount per year, 3% a year or 4% a year over 30 years. You could just amortize that over time, and that's your fixed cost. And if you sell a certain number of units that have a $20,000 profit each or a $10,000 profit each, eventually you pay off the Gigafactory. And so that's what they're doing. So there are infrastructure costs that you could build. It's sort of like building out the supercharger network. Looking at the supercharger network, you're like, oh, that's a lot of chargers for 100,000 cars. And I used to pull up to the supercharger network and there'd be 4 chargers, and none would be used. Or then there would be like 8 and 2 would be used. Now, all the superchargers are filled to the point at which in the software they tell you which superchargers are in use and which ones aren't, so that you can skip a charging station if it's backed up. And now the big complaint is there's too many people at this. The wait is too long at the supercharger station. Well, that's because the Model 3 came out, and they went from having 100,000 cars on the road to 400,000 or whatever it is, something in that range. So, the supercharger network is a perfect example of like you're building out some infrastructure, and eventually you're going to divide it by not 100,000 cars, but 1 million cars.
Yeah, and I'm really glad you brought up Tesla because you were one of the first Model S customers, I believe, and have been you on the original Roadster, the first Model S customer, so super deeply involved with the company. And from my perspective, I have this weird gut feeling that Tesla, I've been following them for 10 years personally. Yeah. As a company, the intrinsic value, the earnings power, they're better than ever. So I just feel like there's never been a bigger disconnect between the reality of what is actually going on at Tesla's factory and the company versus the perception in the media. And I just was wondering if you had any comments about that, or
there is a huge short interest right now. The stock market is very high, and there are a number of companies that have been attacked by shorts. And the shorts are looking for companies that they perceive to be overvalued. And I would say Tesla has been fully valued, or it's valued to perfection. In fact, I think Elon said that, like we're pretty well valued at certain points. So when the stock becomes fully valued, let's say, or even if it gets a little hot and people are betting on the future, then some people are going to take the other side of that bet. And those people, that's fine for people to do that. What happened this time is it's gotten a little bit contentious where I think they're spreading fear, uncertainty, and doubt with anonymous accounts, and like sending drones and planes and people to look at all the
Twitter FUD is ridiculous.
Yeah, and they're all just like the Tesla Q, I guess that's, for short. They're out there like saying, well, we found 300 Model 3s in a parking garage in, San Jose or wherever they're finding these. And they're like, oh my God, that means these cars aren't selling. And it's like, well, then the other side of that is, well, they're on the way to being sold.
Right?
And that lot will be empty in a week. And so they're sort of telling half the story. And then Elon didn't do himself any favors by mixing it up with those people. He should not be fighting with the shorts. He's incredibly talented. He's a personal friend. Like, he doesn't need to mix it up with a bunch of shorts. He should be talking to the owners of the cars, and he should be focused on his team and the people who love the cars and just ignore the shorts.
So,
and he's doing that now.
And that's one thing I was confused by, I guess, is Elon's such a smart guy, and I give him the benefit of the doubt almost all the time. And then I'm wondering, like, does he realize that, the media people writing FUD, maybe a couple shorts, like, they're not really driving the price. Tesla's worth $50 billion. They could raise when they want. Like, the market's giving them the benefit of the doubt. I think it's
probably
why listen?
He's probably just, it's probably a lot of stress to be under, and he's probably, if you're getting beat up all the time, at a certain point, you can punch a person 10 times, they might take a swing back. So I don't blame him. Like, I don't think I would have, I don't know if I would have been as reserved as he has been. I mean, I might, I'm a bit of a brawler, so I would fight back. In hindsight, maybe on the edges, he shouldn't have, been poking them as much or mixing it up with them. Really, the thing about critics is nobody remembers the critics. The critics die in obscurity. They don't last the test of time. There's really only one critic I can think of in history who was ever important, and that was Roger Ebert. And Roger Ebert, he was a movie film critic, and Walt Mossberg comes into this as well. But both of them, with the consumer electronics and PCs, but both of them were so good and at assessing the technology and how good it was and doing criticism of it, but they were also fans of it. Walt Mossberg loved technology. He loved beautiful products. And Roger Ebert loved movies. So they were very actually open to the new things in the world. And so I think the role of a critic is very minor in the arc of history, with very few exceptions. And even then, it's still minor. It's not a major impact. It's, medium impact in the case of Mossberg and Ebert. I mean, they had impact, but I wouldn't say it's the same impact as Steve Jobs or, a famous director. As good as they were. So, I think ignoring the critics and focusing on the product is the most important lesson in all of that. And Steve Jobs, he was pretty precocious too. I mean, he banned
Twitter wasn't around, so who knows what he would have tweeted.
If he got on Twitter, it would have been ugly. He banned Engadget one time, and I had to negotiate with him to get them back in the into the keynotes because we had covered the iPhone 4. And somebody called it on Engadget Antennagate. And the team put Antennagate in the name of the story. And then it took hold, and all the other press started calling it Antennagate because you'd hold your iPhone 4 a certain way, and it would short circuit the antenna, and the call would drop. And it was repeatable. They fixed it eventually. It was no big deal, but or was a big deal, and they fixed it. But Steve kicked Engadget out of the keynotes, and we were the first people to really cover them in real time. And I had to essentially apologize to him and kind of say listen, I'm sorry. I didn't mean it to become this whole big thing. And, if we're not in the thing, it's going to look even worse. So these guys are, my team is fans of what you're doing. We should let them into it'd be a shame for them to not be there since they've been there for every keynote. It'd be a shame for you. It'd be a shame for the readers. It'd be a shame for them.
And so thinking about the longer term, ignoring the critics, you've often said that Uber and Tesla are sort of on this crash course in 15 years with the autonomous future. And I think it's interesting to play out the dichotomy of those two companies, but that's also a really great analogy of how much the auto industry or transportation is set to change and how these tech-first companies are really a first mover there. So I'm assuming you're thinking, okay, all cars are autonomous. These are the two companies competing. I know you're an investor in Uber, so I don't know if maybe there's bias. But my point is I think Tesla is hugely, hugely advantaged here by building the actual hardware and what they just did with the software chip and just the way they're getting real world data on so many cars, a magnitude more. I'm wondering even Waymo, not even Uber, if data is the new oil, I just feel like Tesla with combining the AI
Tesla doesn't
chip
have as much information as Google does, because Google has Maps, right? Google Maps and Waze. So Google has the most data. Uber would have probably the second most data because they have more drivers on the road, driving more often. So a driver, me driving my Model 3 to and from work every day is less than an hour of driving. It's 45 minutes. An Uber driver with their phone, tracking every movement on the road for 10 hours a day, 12 hours a day is going to produce much more data.
But gigabyte per hour driven, isn't Tesla collecting much, much more? And they're also learning how you drive, which may be the best way to train an autonomous system by watching you drive, which is data.
Maybe or maybe not. That's true. They're probably collecting more data on the car and the steering wheel and all that kind of stuff. I do think self-driving will be commoditized. I think it's not 90 8% of the challenge of self-driving is going to be commoditized. It's really like this 2% that's really the edge cases that'll be hard to work out, but it's sort of like, think of it like a word processor. Like when you buy a Mac, it has a word processor. When you buy a PC, it has a word processor. One's called Word, one's called whatever Apple calls theirs. When you buy a phone, you have a notepad in it. It's kind of like super commoditized 30 years later. I think we'll sit here 30 years from now and be like, yeah, of course, all cars can self-drive. It's not the differentiator.
And so what would be the differentiator then?
Well, that's a great question. Whoever has the brand with all the credit cards in it and has the best experience for consumers, price. So brand, price, consumers, yeah. And data will help, certainly, for the edge cases. I think they'll become critically important. But I think full autonomy, like level 4 or 5 autonomy, where you don't have a steering wheel, you don't have a driver, you don't need to be ready to take over, that level of autonomy is very far away, especially in cities, especially on rural roads. Where autonomy is going to work perfectly is, Arizona, where there's never rain. But if you live here in San Francisco or the Northeast and it snows, Teslas can't drive in the snow and Waymo can't drive in the fog. All right, like it's literally you're going to not be able to go to work. So in order for it to be really to take off, it's going to need to be very reliable in all these edge cases. Also, people jumping in the street or bicycles and pedestrians jumping in and weird size streets and weird curves. It's going to be very hard. So I'd use autopilot every day for probably, 4 years I've used it every day between the Model X and the Model 3. And it's amazing and perfect on the 280 in perfect weather conditions. And you wouldn't want to drive it right now on streets. It can't do, and you're not supposed to look away. I mean, I'm sure people do, but so we're pretty far off in a city especially. So I don't think the collision course is going to be 10 to 20 years from now. At that time, Tesla might have 4 or 5 million cars on the road if they start making 500,000 a year or eventually 1 million a year. So you might be talking about a couple million cars, and then they turn on, all the cars are part of a giant Uber-like network. That'd be pretty powerful. That being said, I could see, Uber also having a partnership with some car company that already produces millions of cars a year and having them already on the road as well.
Yeah, and it's such an interesting analogy, though, because there was this article that came out that Travis Kalanick, back when he was CEO of Uber, said he would buy 500,000 Model 3s a year if they were self-driving from Elon Musk, and that coincided right before the announcement of, or maybe inception of the Tesla network. And so I think to me, that shows...
Elon's always had that plan. He's always...
Interesting.
He's always watched Uber, and Uber, is... I think to him, like, he's doing the hard stuff, and Uber's,
Exactly. And
not
Uber
doing the hard
showed that
part. I don't know if that's the
they need
case.
the hardware. That's what I thought. Is like,
Yes and
wow,
no.
Uber's kind of showing like, or they're going to have to rely on someone else to build electric cars. Which
Maybe,
is
or it may be a
precarious
commodity, and they may not need electric cars. I mean, gasoline-powered cars, ICE engine is still going to be here for 10, 20 years. And all these other electric car companies, they'll catch up, and, they'll always be, maybe, they're going to be 2 or 3 years behind Tesla's. I think I would say they're 3 years behind Tesla right now. Like they have 100-mile range cars or 150-mile range cars, and they're not very good. And so I think they're probably 3 or 4 years behind. I think Tesla wins EVs. I don't think they win ride sharing anytime soon, but who knows? We'll see. I just don't think you're going to have 100% autonomy. You're going to need to have very close to 100% autonomy for people to give up their cars. And then in that time, there's going to be plenty of time for Uber and Lyft to acquire or be acquired or merge with a company that also is doing it. So,
And one thing I really think about Tesla that's interesting is this principle I have called the stagnation fallacy, which relates to a ton of startups. And you've seen this firsthand of like, Tesla can't do this because there's not enough range, because the charging time's not enough, because the battery time is too expensive.
Yeah.
Or like electric vehicles are charging from the grid, which is coal. And like, if you assume that all these things stagnate, then like it doesn't make sense. But if you assume that they change, it sort of does. And so you being Tesla
doesn't take
firsthand,
a genius. Like Tesla's started out with 150-mile range, and now they have 350-mile range. Like
right, but why is that? I feel like it's so hard for people to grasp.
Well, you have to listen to who's... Number one, consumers are dumb in a lot of cases. Like they're not following the technology. They don't know the pace that it's going at. So that's fine. But then you have the other side of the equation, the people who own the internal combustion engines were spreading that information. So they were like, oh my God, the range is an issue. Anybody who has an electric car knows range is not an issue because 99% of your trips or 99.9% of the time you use your car, you don't need to charge it. And the 0.1% or 1 out of 1,000 times or 1 out of 500 times that you do need to charge it, there's a charging station available to you. People they haven't watched the arc of history is the answer. Like they're not paying attention.
Yeah.
Yeah. And also they were promised flying cars in the 50s and 60s and they never got them. So they're cynical.
And so how do you feel about being an early customer since you bought the Roadster of sort of subsidizing this mission? Because, when I was following Tesla, I got involved because it's like, we need to get off fossil fuels. This is the most important challenge.
Yeah, that's the reason I did it.
And
it was my friend.
But nobody believed in it. And so to me, I feel like the best like story in humanity or like in the news or like that everyone should be talking about is like not only is Tesla succeeding, but every single automaker has done a 180 in just my short time watching this of electric cars are a niche. The Model S cannot even sell close to 20,000 cars a year. Like I remember when I was in finance school, I pitched it. All my professors like, this is a joke because luxury cars only sell that. But now every single automaker is committed to EVs. So how does that feel to be involved in that? Because to me, it's super inspiring to watch.
Yeah, no, I mean, I think everybody who bought the $150,000 Roadster knew they were subsidizing the Model S, and people who bought the Model S and X knew they were subsidizing the Model 3. I don't know if people buying the Model 3 are thinking about that or just thinking, I want the coolest car in the world that's self-driving and, has all these cool features. And maybe I think probably half of them are thinking about the environment. So I think people greatly underestimate the public's desire to do the right thing.
The why behind Tesla, I feel like it's super, super powerful.
It is. And then people are also underestimating like how delightful the product is. Mm-hmm. Like I keep looking at phones saying, you know what? My iPhone 10 was good enough, but then the iPhone 10 Max comes out and I'm like, well, it's $1,200 for this phone and I'm getting $500 or $600 back for selling the old one back. So it's going to cost me another $600. So that's like $1.50 a day or $2 a day I paid for that other one. But it's like, well, I get a lot of use out of it. I'm using it for 4 hours a day. So it's 50 cents an hour. Who cares? So I think that's what people are not realizing is that sometimes the value is so great that people underestimate people's willingness to pay for it. So I keep thinking with the smartphones, like when are people going to stop upgrading? And apparently they're not going to. They just keep upgrading.
Yeah, but even the smartphone has been here for 10 or 15 years. And when I think about the stagnation fallacy, what's next, the friction of getting our ideas into computers, the obvious next step, or maybe 3 steps from now, Neuralink, what Elon's working on. So, and I'm almost thinking like, okay, Tesla eventually will have their own sort of Alexa system in your car, which goes to your home, which you're interacting with to set temperatures, to tell you where to pick it up. And you're like, it almost feels like Neuralink and Tesla are on a weird collision course to disrupting the smartphone in 10 or 15 or 20 years. And I've even heard a bunch of rumors of like maybe Tesla will eventually launch a smartphone once they have all these other puzzle pieces. So I'm curious what you kind of think about these theories.
I don't know about the Tesla smartphone, because that would require an operating system and an ecosystem. So I don't know about that.
But isn't the Neuralink eventually intended to replace your smartphone? Or it's a way to interact with the digital world, sort of?
I think it would augment it. So we're sitting here with our laptops open, and you use your laptop for 4 hours a day, use your phone for 4 hours a day, something in that range. So people, I don't think the phone replaced the laptop. It definitely cut into some amount of time. It didn't replace TV either. It cut into a certain amount of TV time, but people still watch TV, right? So I think it's going to be more like that.
Yeah.
So I don't think Siri and Alexa are going to replace keyboards and mice and touchscreens on your phone, but it will augment it.
And okay, well, here's kind of a moonshot. So if these are like a bicycle for your mind and they increase what you can do, the Neuralink could be a magnitude or a double magnitude, I don't know, 100x more of a bicycle for your mind. So, are you thinking about this in terms of like, how do you think about this in the investing and world? Because this is something we're going to live through.
It's interesting. So some ideas are going to take a long time, like Neuralink, like that's like multi-decade kind of approach.
Announcement coming soon, according to Elon.
Yeah, I mean, who knows what the announcement will be? Maybe it'll be like you'll be able to play, Pong with it or some simple game, and people have already proven that the mind can send short messages and kind of stuff like that, or control something on the screen, a ball on the screen or whatever, or thinking about it. So, I mean, I'm sure there'll be incremental process there. I don't know if you're going to be able to like have your brain query Google and get back in your brain, all the presidents. In order, and then just repeat them back. But that would be a pretty good test. Like if you could tell me, if you could say to me, tell me the names of every state and the capital of every state in America, and I knew 10 of them, but the other 40 I had to query through Neuralink to the internet. When we get past that test, that you can look up information, like on the Wikipedia and then just say it and it's in your brain, that'd be pretty interesting. I think that's 20 years away.
And so one last test.
30 years away.
Yeah.
More. 50 years away.
But it's starting, and if Elon's doing it, I wouldn't bet against it happening. So not a matter of if, but when, probably. And if he's already showing that this is the way the future's headed, you probably
20
have other
years, it seems like,
it.
If you want to be a good prognosticator, just say 20 years, because nobody remembers that you made the prediction. And, if you say 5 or 10 years, people will remember the prediction. But if you say 20, nobody remembers the prediction. So just say 20.
Okay, so last Tesla question. When you wrote this check for the Model S1, we were at like a couple billion market cap.
Yeah.
I think Tesla...
I didn't even know if it was public at that time. It may not have been public.
Oh, it may not have even been public. Okay, even better. So I really think this has like $1 trillion potential. It's in my Twitter bio, disrupting cars, going electric, taking the grid off fossil fuels. We have a CEO, founder.
It's definitely $1 trillion opportunity, for sure.
Okay, I'm really glad you said that. So Elon, this amazing, you bet on founders. He's an engineer. He's an inventor. He's one of the few people who's able to not only have these ideas, but actually bring them to market, which I think is so fascinating, and is the reason why I'm invested in Tesla is because I think that's like a really unique skill. And so I'm curious, you could have made 300x from 3 billion, let's say, to $1 trillion, which is an equivalent return of an incredible angel investment. And so why have you never invested in Tesla? Why has that never crossed your mind?
I had some shares when the IPO happened. I held on to them. I tripled my money, but I don't like trading public stocks. Not my thing. I think the public stock market, I don't understand it exactly. And I think there's a lot of people who have advantages over me in the public stock markets, like quants, and those high-frequency, high-speed traders. They all have crazy advantages. So I like to have a mutual fund approach, low fees with Wealthfront for my public holdings, then some real estate holdings, and then this incredibly binary Hail Mary angel investing practice. And I'm protecting wealth with real estate and low fees on one side, and then on the angel side, I'm just trying to find 5,000x opportunities like Uber, or 500x opportunity, or 1,000x opportunities like 100. What am I at? 100x, 10, 100. I'm at 100, 200x probably for Robinhood, and that'll be 2,000x eventually. So I'm looking for those 1,000x plus returns, and if you hit hundreds, that's good. But the public markets, I kind of feel like by the time something becomes public, your likely scenario is doubling your money every 2 to 10 years if you buy stocks. And some people are good at finding the ones that double every 3 years or whatever if they time it right, and then other people get crushed. I think I have a bigger advantage being here in Silicon Valley with my network, with my bandwidth, with my team of finding the next Uber.
Yeah, and okay, so now I'm going to bring this totally crazy out of left field. There's this new niche asset investing class that have you heard of Jake Paul, first of all? He's a first YouTuber to 10 million subscribers.
Oh, yeah. This is Paul, the two bros.
So drama aside, from a financial perspective, I am absolutely fascinated with this niche of creators and their earning ability compounding as the internet matures, and sort of this distribution of brand equity from CBS, NBC, whatever, to individuals having just being able to distribute on the internet. And I was watching this documentary by Shane Dawson. He's interviewing all these people, all the drama, but there's this tidbit where they say oh yeah, we're not paying for this, our investors are. And these are $20 million houses. I mean, this is Series B level, and I think only maybe a couple
Jake
deals.
Paul has investors?
I don't know if he does, but his peers mentioned they did, and they're equally, and I don't know if he does or he's all self-funded, but I see this new asset class emerging of creators and influencers, and clearly VCs are getting involved, or somebody is. So this has been really fascinating for me just in the past couple of weeks thinking about that. So
PewDiePie.
Yeah, PewDiePie, someone like that. I feel like even, you could be earning 5 million, 10 million a month on YouTube, or, with merch and stuff. And if you value that on, these are almost $1 billion startups.
Yeah, they're not really startups in that if the person gets hit by a bus, what happens? So Apple.
Well, but if Elon, you know what I mean? The key man clause is
Steve Jobs died, and Apple's doing better than ever. So if the founder does their job, the company should live long after they die. And so Apple has been, doing pretty well since Steve Jobs died. If Elon and Jeff Bezos do their job, then Apple and Amazon and Tesla will all do incredible long after their founders are gone. But to your point, like, is there something going on there? Yeah, but the talent business, is it's pretty. You'd rather be the platform or the distribution than the talent. The talent is a good gig. They get paid well, but every talent has a window of time. So they call it the Martha Stewart problem in the business. Martha Stewart was an incredible investment for some people for some period of time, and then she went to jail, and then it was not a good one. So when you can see that when the person's name is associated with it.
Yeah, and what's so interesting
is it's not called Elon Musk cars, or it's not called Steve Jobs phone.
Exactly. And why I'm so intrigued is they're setting up for that, because like these houses, they'll call the house a name of the group, like Clout House. Then they have these 10 creators.
What do they call the Jake Paul house?
Team 10. Like Team 10, perfect example. They all sign contracts and give up a huge piece of their earnings to this brand, which is the company by buying a house where they all live in is almost the platform for these creators. Yeah. So it's almost like they're trying to build
that's what the studios did. You should read this 2 great autobiographies for you to read. One is called Something Like an Autobiography by Akira Kurosawa, the famous Japanese film director who did Seven Samurai. And then read Michael Ovitz's Who is Michael Ovitz, which just came out. Both of them talk about these kind of empires that were built at different times in the entertainment industry. Perhaps this is another wave of that. Who knows? We'll see where these people wind up. But these people seem pretty dopey to me, to be honest.
Excellent. Thank you for those book recommendations. Or book recommendations.
You'll like both of them. Report back.
Definitely.
On what you find. But no, these seem like pretty dopey kids. And I don't know that they actually have any kind of relative talent, but we'll see.
Yeah, I mean, the trigger for me was that they manufacture drama. They had this like insight where like the Kardashians, how did they get big? They're manufactured. So it's like a weird like hybrid of reality and acting. I don't know. I think it's fascinating.
It's certainly fascinating. Like they realized if they do a fight,
we'll get 10 more views, and then we can. Yeah. And so they're like paying people to be their fake girlfriend to get into. I don't know what's real or not, but I just the business is interesting.
And it seemed like they did the fight along race lines too, like black YouTubers fighting white YouTubers. That was a coincidence, or were they pandering?
I think it was like UK versus US, and it
felt like they were pandering and playing the race card, doing a race thing.
Yeah, I don't know.
Which is a classic trope in the boxing space, is to have the Irish fight the Italians or the Italians fight.
I mean, I will say I think they're using every single card they can to get views.
Yeah.
So, and switching up a little because I want to just cover a lot.
Yeah.
You know the PayPal mafia. You've been around the space for a while. PayPal has not fulfilled its vision to me originally of like disrupting the bank, moving it all online. I'm a huge fan of Bitcoin. That's how I like funded Hyperchain. I made some money on Bitcoin. It seems like Bitcoin and this crypto movement is sort of becoming what PayPal wanted to be. And so particularly Elon Musk.
Except without the user adoption.
Without the user adoption, I mean, it's much slower. Yeah, sure. But the vision.
With zero user adoption.
The vision is there. Like I'm curious why like someone like Elon Musk is so quiet on something like Bitcoin when it's so similar or parallel to a vision he wanted to disrupt.
It's a giant scam filled with scammers, probably.
Is that what you mean about Bitcoin? I also want to just ask you about Bitcoin
generally,
in general.
Like the original concept of e-money has been around for a long time.
But no one's really done it. That's the thing.
I think Venmo, PayPal would probably disagree with that assessment, and the billions and trillions of, maybe, I don't know if it's trillions, but tens of billions of dollars that go through those systems would disagree with that. Those things have been highly successful. There has never been this global monetary freely traded digital asset like you're talking about. Different countries do not allow PayPal. So if you want to PayPal somebody in, I think, India, you can't do that because we had to wire money to people there one time. So there are some countries that don't have that, but there's a reason people have financial regulations. Typically, it's to create law and order in their countries or control. It could be nefarious. It could be with good intentions, depending on the country and the leader. But crypto is 98% a giant scam. And a
Agreed.
Ponzi scheme. And then the 2% is technology that half of it existed long before crypto, and some of it's kind of novel. But the blockchain is not a technology that has many applications. I think people are like, oh, well, blockchain everything. And it's like, yeah, I don't think your Uber ride needs to... I don't think your Uber ride benefits from being on the blockchain, or your Airbnb nightly stay benefits from being on there. I do think, like, an alternative currency, sure, that's digital, sure, that's borderless, sure, that has low fees, sure, like this is all good. Mm-hmm. But there's a reason why people put rails along the financial systems because of bad actors. And crypto had good intent, I think, and then got co-opted by a bunch of manipulators. Probably the 3 or 4 times Bitcoin spiked was all manufactured. So a lot of and that's been proven by different folks that like from 200 to 1,000, there was a bunch of manipulation that occurred to get people excited about it. Who knows where else manipulation occurred? But if you look at CoinMarketCap and you see the amount of transactions they claim are occurring, that can't be possible.
Yeah. And the fiat system just seems to get underrated in all of this. That's my biggest learning from crypto is like the more I dive into it, the more I was like, wow, the fiat system's actually kind of doing a really good job of spurring innovation and growth, and money's pretty, not the best, but like, it just sort of...
it's a great fun intellectual argument. And like, I remember people having this argument about like Napster, and they were just like, you can't stop it. And it's like, yeah, you can kind of stop it if you provide a service for $7 a month that gives you all the music in the world. Then there's no reason to go steal it. Right? So like the reason why Bitcoin and cryptocurrency hasn't had any user adoption, like literally zero, is because money and Visa and PayPal and Venmo, they're all working really well. So when's the last time you bought something with Bitcoin and you're a Bitcoin evangelist?
No, I
invested
it. No.
Okay. Have you ever bought anything with Bitcoin?
I bought a crypto kitty with Ethereum.
Okay,
a couple crypto kitties.
So you've bought nothing.
You can buy crypto kitties.
Right.
They're on the
Essentially
blockchain.
Nothing. Right. They're on the I'm glad there's an immutable blockchain so that everybody knows exactly where that digital kitten was traded. I mean, It's like, is this really like innovation? It's garbage. So I think crypto's garbage. I think the people involved in it are largely garbage, scammers, and grifters and losers.
Okay.
And then there's a small percentage that are visionaries, like Jed, who created Ripple, and Stellar is a genius. And there's a bunch of other geniuses around who have really good intentions with it. But the whole thing has been co-opted by criminals and grifters. I mean, 2,000 ICOs, and what is it, 1,500 of them are MIA, just gone? Where's the money?
Yeah.
They never released a product. They just stole and absconded with the money.
I mean, if you raise like 40 mil at a 400 mil valuation, you haven't done anything. Like,
doesn't make any sense,
yeah,
right?
it doesn't make any sense. I mean, you could see that it was absurd.
And also people will ban this stuff. So like in China, I think it's largely banned now, and other countries will ban it or require you to have a license to do it, and it will get throttled and controlled. And then this idea that like you can't stop it, it's like they're arresting people in China for using a VPN or selling VPNs. That's a VPN, a virtual private network. Just to see the New York Times, if I were to sell you a VPN in China, I might go to jail for 10 years. If you want to stop cryptocurrency, it's pretty easy. Whether it's South Korea or China, you say if you trade cryptocurrency without a license, you go to jail. It's illegal, which is what they just did with ICOs, which is why ICOs are no longer happening. They were like, by the way, here's the rules. They've always been here. If you take people's money, you need to know who they are, you need to know they're accredited, and you have to give them some certificates, and you have to deal a broker license, yada, yada, yada. So the SEC is like, guys, you all knew this already. You just pretended that there were no rules because it was digital. This whole utility token thing is ridiculous. Like, people are buying tokens for services they don't use, that don't exist yet. So they're buying a SAFT, a future token. It's a security of it. They're buying this like simple agreement for a future token. It's like, okay, well, how is it a utility token if there is no service? I mean, I understand I could buy airline miles and I could use them, but this is like selling airline miles before you've invented the airplane.
But to play devil's advocate a little, something like a real estate,
please do,
a real estate trust or an asset that like any place where you can disintermediate trust, and let's say there's like 6 financial institutions each taking a cut to basically trust that stock certificate's in your account or that real estate thing's in your thing, like that. Whenever I hear the word, there's huge friction around trust. That's where it seems like the blockchain actually does sort of have an interesting angle there. Yeah.
So I would buy a house and I would trust what's on the blockchain more than I would trust the lifelong brokers who do a certificate with a notary.
Well, if it was like a government blockchain, that's like if you're the owner of this property's on this chain.
Yeah, sure. I think that the immutable blockchain concept for custody of an asset makes sense. Like, I own this car, I transferred it to this person. You can see that it was transferred. The title of the car was transferred from me to you. Sure, that makes sense. And I think also, like, yeah, digital, being able to share like the equity in a venture firm and making it tokenized, so if there were 20 LPs in a firm, those 20 people amongst themselves would be preordained that they could trade the shares in that fund freely amongst themselves, and then perhaps with other people if they were approved. Sure.
Yeah, and I think I know the company who's building that, a company called Carta.
Yeah, Carta launched at our conference when they were eShares.
Oh, yeah. They're doing really interesting stuff in terms of providing liquidity. I mean, I know you were talking about this new law where it can be easier to get accredited investors by passing some tests.
Yeah.
And that could really open things up with what companies like Carta are doing, and then bring it back to what you're doing with angel investing. Yeah. There's a surge of potential liquidity coming into this space if, platforms like Carta
That's
really
the
go
only
mainstream.
Silver lining of the entire crypto scam.
Which is why I brought it up.
Yeah, it is literally the silver lining. It showed that there is a global appetite to take risk and to invest in new things. That's good. We talked before about critics. Like, critics can support the new. Yeah, investors can support the new. There just needs to be some guardrails on it. So, if you go to Vegas, the person has you go to that casino, even though they have the odds are against you, the odds are against you. It's published somewhere what the odds are. They have a license. There's cameras. There's some guardrails. And yeah, you can blow a lot of money there very quickly, but there are some guardrails. So that'll be the same thing with this. You can invest your money in startups if you want to, or you could buy my shares in Robinhood or Wealthfront or Calm.
This is huge. Like, for my subscribers and I, this is such a frustrating pain point. Is I've watched so many. I've been an early user of all these incredibly disruptive technology products, and I can't. My hands are tied. And I
that's unfair.
That's really, and I feel like this is just making the gap in America is widening because of this. And I'm trying to just brainstorm ways of, like,
all the drivers on Uber and Lyft and all the hosts on Airbnb and the users of Airbnb, long before those companies, got major investing, they knew that these were real products and that there were products that would become big because they saw customers or they were the providers in that marketplace. They all should have been able to buy shares from the beginning, right?
Yeah.
Like, if Airbnb hosts said to Airbnb, like, Airbnb is like, hey, we're going to send you the money for renting your apartment. If they had said, you know what, I'll just take equity in Airbnb, you keep the money, that would have been a better idea.
Totally. I mean, and from the perspective, like, I'm locked into public markets, all these exciting companies are going public later and later and later, and it almost seems like never. And so I just don't know what's going to turn that around. Like, I'm really waiting for it because it just seems like it'll also be
interesting for people to be able to, if 10 million people put $10 each into a company, none of them would be taking a lot of risk. But in aggregate, the company could raise $100 million. It's pretty incredible when you think about it. So get 10 million people in the world to put $100 into Airbnb in year 3 or 4, and they raise $1 billion from consumers. Pretty great.
And that's why I think Chamath, his whole prediction of the Silicon Valley Ponzi scheme, if he thinks it's bad now, and we have all these new accredited investors,
not as bad as he's saying, yeah.
But it could get. I'm thinking like magnitude.
All markets
have, like,
get
SoftBank
heated.
coming in with more and more SoftBanks coming in with the $10 billion checks to even push it further. I don't. And part of me is like, actually, these technology companies are worth more than ever. They are more disruptive than ever. They're talking global opportunities. They should be spending more money than old startups. So maybe that's part of the pattern.
Yeah. Anytime you're investing, there's risk. So people should only invest what they can afford to lose, and they should be diversified, and they should do as much research as possible. The problem with crypto is...
And everybody always follows that rule, so it's fine, right?
You would hope, but people don't. I mean, the biggest mistake people make, and one of the reasons I wrote the book, was because people would get into angel investing, and they would meet their cousin's roommate from college, and they'd say, I have an idea, and they give them $250K. And in the book, I say, okay, put $2,000 into each of 20 companies through syndicates, mine or other people's, or Seed Invest, or AngelList, or Jason Syndicate, pick it, or do all of them. Now you've put $40K to work, not $250K. And then you got to meet 20 companies. And then look at their monthly reports and say, these 3 are the best. Then put $25K into each of those 3. Now you've only put $100K and change to work. So you put less to work, but you put it to work more intelligently. So people just didn't understand this playbook would exist. Same thing with crypto. They spend $100,000 investing in crypto in the first 2 crypto projects they heard of. They did no research. They never met the founders. They didn't talk to the developers. They didn't see any products get made. They don't know where their office is. They don't know who their attorney is.
That's just gambling, not investing, really. I mean,
it's even worse than gambling. It's more information available to gamblers and better odds. I mean, it's one thing to have long odds like we have in startups where, it might be a 1 in 10 chance this company succeeds, but if it does succeed, it's going to pay off more than 10 to 1.
Yeah.
In these cases, they were betting there was a 1 in 100 chance this person would ever finish the product, and then a 1 in 10 chance if the product would ever succeed, right? So we're talking about a much higher magnitude of risk. That's why I also tell new angel investors, there's no reason for you to invest in companies before they have pre-product market fit. So if the company doesn't have customers yet, and they're under $10K a month in revenue, then tell them you only invest in companies with $10,000 a month in revenue and 5 or more full-time employees and that have customer references. If you do just that, you will avoid so many mistakes. And you say, oh, well, won't you avoid getting in early? It's like, probably not, because the difference in price for a company that is pre-launch and post-launch is probably 2x. So you're not going to miss out on that much. And the amount of risk you reduce is going to be much greater than 50%.
And that was the biggest lesson I got from your book is like, if you're a real entrepreneur who wants to do it, you'll be doing it. You won't be sitting there waiting like, oh, I need to raise 50K.
Yeah,
then I
check
can,
writer.
like, that's BS, and that was, I don't know. It seems kind of obvious when you say it and think about it, but really, I think that was like one of the biggest lessons I learned is like, and that's kind of what I try to do with Hyperchange is like, I'll just start putting out videos and start making a little, like, I don't need to wait.
Yeah.
Like if you're like you shouldn't be waiting. The people who are running without
you're either
you
waiting
are
or you're creating.
Yes, I love it.
Yeah.
So
the people who are waiters, you don't want to invest in.
So
creators, you do want to invest in.
Yes. And so what kind of companies, like Hyperchain is all about disruptive technologies. Yeah. What's coming next? Do you have any companies that you're investing in that you're excited about?
I'm very excited about com.com, which we invested in 4 years ago. And now they're making $80 million a year. When we met them, they were doing $10,000 a month, $100,000 a year. Revenue. And solid. Like actual revenue, not the valuation.
Revenue. Yeah, okay.
We just invested in a similar company called Steezy. And Com and Steezy both had a hard time raising money. Steezy does dance lessons, but it's a subscription for $30 a month, $25 a month. I think they're down to $20 a month now, but it started at $30 when I met them. They lowered the price a little bit. And everybody wants to learn how to dance, right?
Wait,
you go on YouTube?
Yeah, I'm already thinking like, man, there's like that dance class at my gym, but like there's too many people there and like I don't really want to go.
Imagine you're just like watching a dancer who danced with Chris Brown or Madonna on tour, but you're watching them from 3 different video angles, and you can slow it down, you can loop it with the software.
Sign me up.
Yeah, exactly. And so they're doing very well. Cafe X, you know about, you're wearing the T-shirt. That's really making progress. They hit a record yesterday for revenue from one of the machines, which is very good, the 2.0 machine that you went to on Bush Street. So, and they're working on their 2.5 version of the machine. You saw the 2.0, which has the tap. So they're pulling green tea in the tap or nitro. Other things can come from taps. You may have heard. The robot is pulling the tap. Like
cold brew, I feel like comes on tap a lot.
They have cold brew and they have tea right now, but other things could be pulled from a tap.
So what?
I don't know if you're past 21 years old yet.
Yeah, I am.
22? Yeah.
25.
25. So you may have seen a tap in a bar pull other things.
Yeah, definitely.
Beer, cider.
Yeah. Okay. Exactly my next question. Like Cafe X. Okay. So like it's a robot, but for now it was almost just like grabbing the cup out of a Keurig machine and moving it. Yep. Like kind of a simple, like a Tesla engineer could have coded that in a day, maybe. I don't know. Yep. Or like, but so how does this evolve to like the beer keg or like, are they just, is it kind of like teaching the robot more and more?
So try to get it to pick between 5 different types of beans and 3 different cup sizes and build a tap that when you pull the tap down, it doesn't overflow, even though it's a tap where you get foam on the top. How does it do that? It's got a weight sensor. It's got a visual eye that knows the cup is full, but that it's not full because it's only 6 ounces on the scale, right? You get all these kind of interesting sensors that could go on. And it can do 12 cups in 4 minutes. So to do that kind of stuff gets a little bit more complicated than an app, than the enclosure. And then you can imagine if they are doing hot drinks and they're doing cold stuff from there, there's other things they could do. So right now, to do 100%, do the things they do right now, it's all 100%, right? But if you look at Zoom Pizza, the dishwasher, the robotic hamburger maker, those are all 20, 30, 40, 50% automation. They're not full automation. Unless you're fully automated, you're not automated, is the way I look at it. You need to have a full solution, fully automated. And that's what CafeX is doing. Everything they do will be fully automated, not half automated. So you can imagine if you went to a Starbucks, you got a drink, but you might also get food. You might also get other things. So over time, I think you'll see it do all kinds of other things.
Yeah, I'm baffled that Starbucks is like not working on this or like hasn't tried to build it because it's
kind of hard, if you.
I guess they're not a software robotics company, so
they're not. Number one, they're not a software robotics company. That's for sure. And you have to build all that software between the espresso machine and the robot arm and the app. So it's not the hardest task, but it's not the easiest task. When you open those machines up and you see the guts of them and what's going on there, it's not that easy. It's pretty complicated.
I'm a huge believer in it too. Yeah. And if they're really the first person figuring out all these problems, then they're the cheapest with the machines. Their machines are the best. They have the most locations. Like it just gets harder and harder to catch up with them by the day.
Innovation will just keep happening. So every 6 months, you're going to see 2.2, 2.5, 3.0. And you can imagine it's just going to get better and better and better and open 24 hours and cheaper.
Pace of innovation. How do you gauge pace of innovation?
Yeah, it's pretty simple.
But like when you're looking at investment, like that's like it. That's the crux of like when I boil down my personal investing philosophy, like that is the alpha, right?
Yeah, I mean, you're going to need to have a pace in which things are getting better and more interesting, and it has to keep going. And some people are capable of that, and other people are not. Big companies tend to move very slowly. So, every time I get an OTA from Tesla, I'm like, okay, there's going to be another feature that will be in the Mercedes-Benz in 2025, and I'm getting it for free with my car, right? Like, so they just put a speed limiter on it. So I put speed limiters on all my Teslas now. So, like sometimes you don't realize you're driving 80 or 85 or someone even hits 90 in a Tesla. You wouldn't know you were going 90 in a Tesla.
Yeah, I've done it.
Yeah, it's so quiet and smooth that you would never know. And so that's what happens to people. So now it chimes if you hit 85 or 80 or 90. That was a feature they didn't have previously. They have it now, And will other companies add that? Sure. I mean, maybe there's a car company that has it already. But they can just keep adding those things because of the velocity in which they're, going. It's definitely something to keep in mind when you're investing.
And so, Jason, thank you so much for sharing all your insight. And so I'm curious if you have any last words of wisdom for Hyperchange or anything you're working on, and then where can the Hyperchangers find and follow your stuff?
Well, I have a podcast. It's right over here on YouTube, This Week in Startups. You can click on this link right here. You put a link right here, This Week in Startups. This Weekend, I guess, is our handle on the YouTube. You can watch me interview people. You can go to jasonsyndicate.com if you're an accredited investor and sign up. If you're a company, you can apply to get funding from it. And if you're non-accredited, you can sign up for the wait list in case we do at some point do a non-accredited thing, or non-accredited becomes accredited. Who knows if the rules change. And you can read my book, Angel, or listen to it because I speak it. If you like my voice, you can hear me talk for 6 hours.
Yeah, I cannot recommend the book highly enough. And I would say just thank you so much for coming on. And everyone should follow Jason because I think you have a really great pulse on just basically Hyperchange. And so
absolutely,
congratulations
I'm a big fan
on your
show.
Podcast. Thank you.
Thank you. At Jason on Twitter.
Yep.
At Jason on Instagram. Jason.tumblr.com. You can find me in those places.
All right. Peace.
Peace.